Title: How to Build a Solid Forex Trading Plan, Your Blueprint to Trading Success. Welcome back to the Professional Forex Learning Series Roadmap. In today's episode, we dive into something that separates dreamers from doers in Forex trading. Right finger the trading plan. You see, trading without a plan is like sailing without a compass. You'll end up lost, frustrated, and eventually broke. But a solid plan, that's your roadmap to long-term consistency and discipline in the markets. Whether you're a complete beginner or someone who's been trading for a while without results, this video will guide you step by step to building a personalized, powerful trading plan. Part 1. What is a trading plan? A trading plan is a written guide that outlines how, when, and why you'll enter or exit trades. It defines your strategy, risk tolerance, entry and exit rules, money management techniques, trading hours and more. Think of it as your trading constitution. It keeps you in check even when emotions try to take over. Pro tip: if it's not written down, it's not real. Most failing traders act on feelings. Successful traders act on a plan. Part 2. Why you absolutely need one. Let's break it down. Without a trading plan, you overtrade, you revenge trade, you break your own rules, you panic during drawdowns, you blow accounts again and again. But with a plan, you stay consistent, you reduce emotional decisions, you measure what works and what doesn't, you build confidence and trust in your system. Example: a trader named Marcus used to open 10 random trades per day. Once he created a trading plan with a max of 2 trades per day and clear entry signals, he became profitable in just 3 months. Part 3. Components of a great trading plan. Let's now build your trading plan together. Grab a notebook or your favorite note app. 1. Pairs you will trade. Don't trade everything. Focus on 1 to 3 currency pairs that you understand deeply. Example: EUR, USD, GBP, JPY, and Gold XAU, USD. 2. Timeframes. Define your analysis and execution timeframes. Example: D1 daily for analysis, H1 hourly for entries. 3. Trading strategy. Be specific. Example: trend continuation using moving averages and support resistance. 4. Entry rules. Spell out exactly what qualifies as an entry. Example: only enter buy when price is above 50 EMA, forms a bullish engulfing candle at a support zone. 5. Exit rules. Don't just guess when to get out. Example: set take profit at 2x the stop loss. Exit manually if structure breaks. 6. Risk management. This is your survival key. Example: risk 1% per trade. Never risk more than 3% total in one day. 7. Trading time. Know when you'll be active in the markets. Example: trade only during London session, 9 AM to 12 PM. 8. Mindset check. Make sure you're in the right headspace. Ask: am I calm? Did I sleep well? Am I trading out of boredom? Part 4. A realistic trading plan example. Here's a sample trading plan from a real trader who grew a $1,000 account to $4,000 in 6 months. Greater than trader: Jessica M. London. Pairs: EUR, USD and GBP, JPY. Timeframes: D1 for trend, M30 for entries. Strategy: trend continuation with break and retest. Entry: price breaks resistance, retests, forms bullish engulfing, RSI greater than 50. SL: 30 pips TP, 60 pips. Risk: 1.5% per trade. Sessions: only London Open. Daily max: 2 trades per day. Emotional rule: no trading if I'm tired or frustrated. Simple, clear, repeatable. Part 5. How to stick to your plan. Writing the plan is easy. Following it is the real battle. So here are 4 ways to stay disciplined. 1. Print your trading plan and review it before each session. 2. Use a trading checklist for each trade. 3. Track your trades in a journal and review your mistakes weekly. 4. Set a penalty for breaking rules, like taking a full day off from trading. Eyes remember, discipline is the bridge between strategy and results. Conclusion and call to action. Let's be real, most traders lose not because they lack talent, but because they lack structure. Your trading plan is your structure, your accountability, your truth when emotions lie to you. So here's what I want you to do. Right finger step 1, write your first trading plan today. Right finger step 2, follow it for at least 30 days. Right finger step 3, track your progress and adjust based on real data, not emotions. Coming up next, in our next video, we'll dive into Forex journaling, how to track every trade and actually learn from your wins and losses. Don't forget to like, subscribe, and comment below. Speech balloon, what's the #1 rule in your trading plan right now? See you in the next lesson, and until then, trade with purpose, not emotion.